Good morning. This is Dylan Jovine with Behind the Markets. Happy Friday. Today is Friday, October 17th, TGIF. We've made it through the week together. Today, I'd like to talk about, we've been talking so much about AI and data centers and energy and China and all these other things. It's been a while since we talked about straight up M&A takeovers. And a unique window for bank takeovers has just opened up. And it looks like it's going to stay open for the next 12 months. And it's a big deal. And we have a setup that reminds me of the setup that we had in the 90's when I was starting out on Wall Street and I picked a bunch of banks. And that's how I made my name. And a lot of you guys don't know this. I got into takeovers as a young buck on Wall Street. Paramount Communications is the first big one that I got involved in. And then all of a sudden I started reading about banks, and they reduced the Glass-Steagall Act. The Glass-Steagall Act was the act that came about in 1933-34 Securities Act that really limited banking and investment banking activities and brokerage activities. They really put a limit there that kind of kept us back. And banks basically were not allowed to really grow beyond a certain amount. Regional banks, et cetera, et cetera. You had these money center banks in New York. But in the 90's, there was a big push in both parties, certainly Bill Clinton, but both parties, to reduce the Glass-Steagall Act, to let banking kind of unshackle banking, let them go out, let them start putting more of their capital, their reserves to use. And what happened is that created this banking boom. And that's how I made my reputation for myself. That's how I made it. I was sitting there in my 20s, and I would sit there and look at the map of the United States, okay? And I heard JP Morgan Chase saying that they'd say, we want to expand our retail deposit base in Michigan. So then I'd go and look at the banks in Michigan, and I'd find the ones that had a bad efficiency. Really, their costs were too high, low profitability, low return on equity, return on assets, and old CEOs that were they didn't have their finger on the pulse anymore. And I'd start picking them. And I'd say, okay, that's the most likely to get taken over because it's mismanaged. And I picked one like Michigan National Bank, and then a month later, JP Morgan bought the company. That actual takeover, the trader who worked at my firm, at the firm I worked at, actually got in touch with the SEC. They thought that I was trading on inside information. True story. I go down to the SEC. They call me down to explain myself. How did you know this was going to get taken over in 3 weeks? Everybody told me to bring a lawyer. I didn't bring a lawyer. I just walked in there with my briefcase, and I sat down with all these regulators by myself, and I showed them how I was thinking about this, the logic I was using to process this, to make these decisions. And I walked out 3 hours later with a lot of high fives and congratulations. Anyway, so that gave me the confidence to start a brokerage firm, actually. So we have a similar setup and window that we had in the 90's. We have a similar one now. We have a massive bipartisan, really deregulatory effort there where it's freeing up these banks. And it's not the money center banks that are really looking to expand this time. It's more the regional banks. So, for example, last week, Fifth Third Bancorp announced plans to buy Comerica for, under $11 billion. That's just the start. So what these regional banks are starting to do is they're starting to look around the map and say, okay, Texas is a growing market for bank activity. Let's muscle in on Texas. Let's go in there. So you're starting to see, or California, or Florida. You're starting to see the South, certainly in the South, this real focus on these regional banks bulking up so that they can better compete with the bigger banks. So I have a list of banks based on, again, my old system, basically CEO age, geography, and of course, efficiency, basically, and profitability. What I'm looking for when I'm looking for these bank takeovers, first of all, I'm looking for an area that all these CEOs, an area that has a deposit base that's growing, that's really good, because you want business that's growing. And I'm looking for a bank that's not run great, a poorly run bank, because what I've observed in the 30 years of looking at these is that better run banks acquire poorly run banks. They're able to acquire them cheaper because they're not running their business well, and then extract efficiency, and the asset is worth a lot more. So they're basically able to buy $1 for 60 cents and then wring out all those bad management practices and really capture the dollar in economic value. So it's very exciting. I'm putting together a list. I actually have a list right now on the companies most likely to be taken over. We're going to be sharing it. We're putting together this little kind of report for Takeover Targets members. We're going to be sharing it. But I guess the headline as we enter in this weekend are bank takeovers are back. I'm very happy to see that. Very exciting for me. It's a trip down memory lane, kind of Groundhog Day. And we have this unique window where you're going to see a lot of deals. There's going to be good money to make over the next 12 months as these bank deals start heating up. And I think the gun fired in the race, the starting shot happened last week when Fifth Third Bancorp bought Comerica. Comerica, gosh, that's too bad. They were so well run in the 90s, and they were one of the buyers. And that's the thing about the banking business. It's either buy, growth, or acquisition, or you get bought or be bought. So there's really so everybody in that regional big bank, mid-sized regional bank is going to have to look at their business and say, look, we either make an acquisition to grow or we're going to get gobbled up. And it's a shame because in the 90s, Comerica had great leadership. They were very aggressive, very well run. And that is not the case these days, unfortunately. Anyway, that's all I have. Have a wonderful weekend. I will see you bright and early Monday morning.